if that comes to light, right? Like what happens to the market, right? What happens to values and pricing in the market? Nobody really has the vested interest for that reset to happen. This episode of the Under the Table podcast is brought to you by Shrubs.me, your all-in-one digital hub. Share files, links, videos, and more from one beautiful customizable page. Picture a cross between Dropbox, Linktree, and Patreon. Get your free account with 2.5 gigabytes of cloud storage today at Shrubs.me.
And the regulators, like we have Rico for real estate, but it was
Fisco.
Fisco before, but they got like wiped out, and now they've got a new regulator.
They got wiped out because of this.
Yeah.
Just to be really clear.
Yeah, and like
this
the
was
whole
such a black
Fisco
eye.
is gone. Yeah,
yeah, they
exactly.
were gone because of this. So it was such a black eye. And look, I mean, it was so blatantly obvious. And I just did a podcast with a guy named Ron Butler, who was, to his credit, very active, very vocal in trying to warn the head of compliance at Fisco, and to no avail. And I had a similar experience, albeit not with the same sort of connections that he had. So it was easier to ignore me than it would be to a guy like him. But it did raise some questions as to how they could be so negligent on this file. And I would point your listeners, if they want to read a crazy story on this, there's a guy named, I gotta make sure I don't screw this up. It was Matt. See, I'm Googling this as I'm talking to you guys. Yeah, right here. You look up, there's a Reuters article from 2019 from a guy named Matt Scuffham. And it's called Exclusive Canadian Regulator Failed to Make Checks on Risky Mortgage Brokers. And it basically what Matt did is he went through Freedom of Information to get any document related to Fortress from Fisco. And basically he found that there were these internal documents where these people who were supposedly in compliance hired to bust fraud in the mortgage space. And they're basically like emailing back and forth being like, holy shit, like if we're not here to shut down guys like this, what are we doing?
Yeah.
So it suggests to me that either there was unbelievable ineptitude at the highest levels of Fisco, or worse. And I'll let you fill in the blanks of what the worst might be. Yeah. But this was a goddamn failure of the highest levels at one of our most trusted regulatory entities. And it speaks to just unfortunately, how broken the regulatory apparatus is in Canada, that we just can't get serious about white collar crime.
Yeah, and a lot of them in the mortgage space. Even though there's a ton of stuff, we'll talk a little bit about our experience with one of the development companies and multi-family rental companies that we discuss on our show. But a lot of the fraud has to do with mortgages, especially out in BC. This is pretty common, but a lot of it has to do with fraudulent types of mortgages, not just on people who are investing in those mortgages, but also people acquiring those mortgages and when they get caught. And so clearly there's a regulator issue. Clearly there's something going on there that they haven't been able to. Ron talks a lot about mortgage fraud and stuff too. So obviously and there's lots of people who've got their speculations on how much fraud there actually is. But nonetheless, we've caught people. We've caught people doing it. And now it's about, okay, well, these criminals, essentially fraudsters, who would normally be raising through like promissory notes and securities and stuff like that, they get around that now by just going to find a corrupt mortgage broker, and it legitimizes everything.
Well, and Ron Butler always says, and I'm sure, I mean, it doesn't take a rocket scientist to figure this out, but he's like, just that one box, right, with the income on it, like that links to the CRA, for God's sakes, like, but this is how deep it goes when the solution is so simple that you could literally wipe out, like, I don't know how much of the fraud by showing the mortgage broker that one box, and that just never seems to happen. I mean, again, you look at it from a certain perspective. Do they really, if that comes to light, right? Like what happens to the market, right? What happens to values and pricing in the market? Nobody really has the vested interest for that reset to happen, right? I mean, except for the first-time home buyers.
Yeah. No, it's a great point. It does raise, I mean, I asked this to Ron when I was on his podcast. I said, like, look, this is such an obvious and simple solution. It's been in place in the US. Like, we like to we like to kind of ride the Americans for having blown up their own housing market with some pretty crappy underwriting, but they also have some pretty innovative solutions to work around some of the fraud that's emerged since. And one of them is that, for most of the last 20 years, they've had direct income verification so that you cannot falsify your income. And so the question is, like, this is such a simple solution. It's either the regulators view this as such a trivial matter that it's not even worth a modicum of effort, or there's a recognition that, to your point, it's potentially too big a problem, and it's really hard to put those horses back in the barn without affecting resale values of houses. And as we know from this government, they've been pretty explicit that, like, they don't really want to do anything to threaten the equity of homeowners. What I would suggest to you is, if they do bring this in, and I think there will be increasing pressure in coming years to do this, it will represent a credit tightening. It will be significant, and it'll be highly geographically concentrated. People don't want to hear this, right? Because they think that they draw straight lines to racial statements or whatever it might be. But there are regions that would be more vulnerable to a correction were this to occur. And by the way, I want to be really clear. This is not a statement of any race, but what I would say is, if you understand mortgage underwriting in this country, you understand that the moment you go from being self-employed to being a verifiable employee, all of a sudden your minimum down payment drops and your interest rate that you pay drops. So there's tremendous incentive to show that you are no longer self-employed, you're now employed at a verifiable company. And so what that means is, anywhere where you have a prevalence, an overrepresentation of self-employment, there is an enormous incentive to misrepresent the status of your employment. And unfortunately in this country,
right.
Well, unfortunately is not the right word, but we know from the data that new immigrants tend to skew more heavily towards self-employment. They are the entrepreneurs, right? We want them in the country as entrepreneurs, but they're in some ways penalized for being self-employed when they go to get a mortgage. So you understand the incentive structure. So it's not a statement about ethnicity, it's a statement about incentive structures. And any area where you have high prevalence of self-employment, you will find higher prevalence of fraud. It's that simple.
Ben, it's called Under the Table Podcast, so please speak freely, okay? Don't worry. Nothing that you can say has not been said.
I seldom hold back, so
nothing you want to say has not been said. But yeah, and Uncle Ron's been on the show too, and he wants to always talk about different mortgage products and stuff like that are out there. But yeah, so when people come here who are high net worth individuals, they want to qualify for mortgages. They probably can't support the debt. They're more likely to be connected to a mortgage broker who's supported other people in their situation in their communities, and that most of the time they're people who can service this debt. Like, it's no big deal. It's very normal for them, and it's not an issue. It's when it crosses into the sector of the economy and society who shouldn't be getting these type of mortgages, right? And who are not financially secure and don't have a lot of equity going into their situation because somebody's trying to make a quick buck.
Yeah, I'll push back a little on that. So here's how I would think about mortgage fraud in this country. You are right in that the document fraud that's happening is, by and large, people who have every intention of making the mortgage payment. In many cases, can make the mortgage payment. They just don't show the income because they are self-employed and they're financially incentivized to take as little income as possible, and fully legally. Okay. The issue is, when you look at, an interesting way to think about it is like, okay, you got 15% of Canadians' labor force that is self-employed. But if you aggregate the balance sheets of all the non-prime lenders in the country, it's like a couple percent of the mortgage outstanding. Where did the rest of those mortgages go? Right? Like, where are all those borrowers? So to me, that's one way to back into.
Wouldn't that explain it?
Okay, is that
the higher net worth
seem
individuals?
Like that makes sense?
I'm just saying. I'm just giving you the other side of that. The higher net worth individuals.
Maybe you can get a couple percentage points. That we're talking like a 13-point delta between what it should be. Right. Yeah. So look, we know there's a lot of mortgage fraud happening. Okay, we know that. We don't have to debate the magnitude. We know it's out there. Okay, CBC's done good work on it. Whatever. Yeah. Here's the problem. What we know about self-employed individuals is, in Canada, they tend to be heavily concentrated in highly cyclical industries. A lot of real estate, a lot of construction, renovation, trucking, like a lot of things that are very cyclically sensitive. And so what happens, if you look at the U.S. experience, in the U.S. they call them Alt-A mortgages. If you look at the delinquency curves of Alt-A in 08, 09, or even before it, for the 20 years prior, what we know about Alt-A loans, so self-employed, is they look like prime mortgages during good times, and they look like subprime mortgages during recessions. That's the loss rates on them. And so, unfortunately, because they're highly cyclical industries that they're exposed to, when the economy softens, they get hit more than your quote unquote prime borrowers. And that's the risk, is banks are disclosing these as prime, and they're probably not.
Which is the reason why there's a higher down payment and higher interest rate requirement, right? Going into those type of mortgages.
If you go with the traditional, non-prime lender, right? If you falsify everything, because we're talking about fraud now. So no one's going to put 35% down on a fraudulent loan.
Yeah.
Right. You're doing it explicitly to get the higher leverage and the lower rates.